Morning, friends. Welcome to Weekly View on Markets. This week, markets have staged a sharp recovery from the lower levels. The recovery is powered by buying by FIIs and DIIs. The market has closed at 17,359. Nifty has closed at 17,359, up by around 415 points with a gain of 2.45%. Bank Nifty has recovered almost more than 1,200 points, closed at 40,608, recorded a gain of more than 3%. Mid cap index gained about 470 points, recorded a gain of 1.59%, closed at 30,035. Small cap index closed at 8,994, gained 71 points with a gain of 0.79%. India VIX has cooled off, is at 12.93, lost about 15%. Now let us look at different sectors. All sectors ended in green during this week. Both PSU banks and private banks were leading the pack, and PSU bank gained more than 4%. Private banks gained around 3%. All other sectors like FMCG, IT sector, metals, pharma, infrastructure, automobile all gained about 1 to 2.7%. Remaining all other sectors gained 0.5 to 1%. Now let us look at technical charts. I am going to explain what has happened in last 1 year and where we are at present. And this is going to help us to understand what is going to happen in next 1 year. So with this, let us look at Nifty chart. This is a daily chart of Nifty index. Nifty index closed at 17,359. As you can see, Nifty has taken support at around 16,900 levels. If you watch my previous week's video, I had very clearly stated that if Nifty falls below 17,000, it will be a good buying opportunity. So the same thing has been witnessed during this week, and FIIs and DIIs who are more knowledgeable investors, they have bought into the market, and you can see on Thursday and Friday market has staged a sharp recovery from the lower levels. Now let us look at last 1 year. At Nifty was at around 18,200 levels. From there, now Nifty is at around 17,300 levels. So Nifty has given a correction of around 4.5 to 5% in that range. So it is not a big correction considering that lot of events have taken place in last 1 year. Lot of bad news has been digested by our market. Still, our market has remained more or less very resilient to these changes, which shows the underlying strength of Indian economy and our markets. Now let us look at Nifty Midcap Index. This is the chart of Nifty Midcap Index. It has closed at 30035. It had touched a low of around 29,300. From there, a sharp recovery has come in on Thursday and Friday. I had been telling that 30,000 is the support level for Nifty mid cap index, and 31,000 is the resistance level. And Nifty has been trading in this range. So now still Nifty has to take out 31,000 level. After that only we'll see further rally in the Nifty mid cap index. Let us look at last 1 year. Nifty mid cap index 1 year back in last April was at 31,500. Now it is at around 30,000 level. It has given a correction of around 4% only, despite lot of bad news coming in from global and domestic sectors. Now let us look at Nifty small cap index. Out of all the indices, small cap index has corrected a lot, and it had dropped below 8,800 levels. And last week, in my weekly view, I had told that in case Nifty small cap index drops below 9,000 levels, it will be a good buying opportunity. And we have seen that happening from around 8,700 levels. It has staged a sharp recovery and almost at 8994, that is around 9,000 levels. So for Nifty small cap index to go up, it has to cross the major resistance level of around 9,200 and 9,250. When this resistance is crossed, we'll see a good rally in the small cap index. Now let us look at last 1 year picture. 1 year back, that is last April, Nifty small cap index was at 11,000. From 11,000, it has come to 9,000 level. So this has given a correction of around 18%. So to sum up, Nifty has given a correction of around 4.5%. Mid cap index has given a correction of 4%. Small cap index has given a correction of 18%. So I believe there is a lot of value at present in the small cap stocks. And having said that, one has to choose fundamentally good businesses and strong companies. Then only we will see good up move in the coming weeks and months. What is there for the investors in next financial year? That is the new financial year. We have digested most of the bad news, including Ukraine war, the high inflation phase in globally, and now inflation has peaked out and has started stabilizing, and in future it may come down. And also the interest rates have also almost at the peak, and from here onwards they will stabilize, and we may see interest rate cycle coming down in coming months. So this all is a good news for the market, and especially in India, the growth in the economy is good. So we do not have a very high inflation at present. So my view is that we'll see better days in the present financial year. So market trend can rally up to around 12 to 15% during this year, and we may see Nifty touching 19,000 levels in this year. It is a good opportunity for investors to buy quality stocks, especially in small cap space, and you will see good returns in next 1 to 2 years time. Now let us look at market fundamentals, some of the economic indicators. A lot of data is coming out at the month end and also year end. I'm going to take a little more time to discuss these fundamentals. GST collection for the month of March 23 has come at 1.6 lakh crore. This is the second highest collection of GST since it has started. So this robust GST collection, which has remained more than 1.4 lakh crore per month for last several months, indicates that our industrial production and GDP growth is quite stable and it is increasing, which is a good news for the economy and for the market. Auto sales for the month of March 23 has come. So the passenger vehicles have increased over the same month last year. So Maruti sales have remained almost flat. Tata Motors car sales have gone up by 47%, and Tata Motors medium and heavy commercial vehicles have gone up by 10%. This is what looks to me as a good news. When commercial vehicles go up, it indicates the demand in the economy. Then exports of vehicle from Tata Motors is down by 42%. This is due to the slowing down of economies around the world. Eicher Motors have reported the Bullet motorcycle sales up by 2%, but their exports are up by 34%. Eicher Motor commercial vehicles sales is again up by 42%, and but the commercial vehicles exports by Eicher is also up by 35%. So they have been able to beat the global slowdown in exports. Coming to the two-wheeler space, TVS Motors have recorded sales up by 5%. Their exports are down. Two-wheelers sales is down. The overall sales of all vehicles put together is up by around 2%. Hero Motocorp has recorded one of the best increase in sales by 15%. Tractor sales are up by around 3%. This shows that the demand in rural economy is yet to pick up. SBI has given their business update re- report. Credit growth has gone up by 14% for this year, and they are maintaining similar guidance for the next year. So they are seeing the good demand for credit growth. The credit growth comes from the companies and the businesses. So that means they are trying to put more money into the business, expand their production facilities, expand their capacities, and investing more into the business growth, which gives me a confidence that the economy is set to grow. And on the back of that, the company's earnings also will go up. I am expecting the markets to give similar 14 to 15% return in next 1 year from the current levels. Core sectors have grown by around 6% in February 23. The growth in the core sectors will result in demand in the economy, and that demand is going to help the companies to grow their business and profits. So that is why I maintain a positive view for the markets in this financial year. RBI forex reserves is at $578 billion. Crude price is at $79.9 per barrel. INR USD rate is at 82.70. I have been watching these indicators for past several weeks. They are all remaining quite stable despite global bad news. So Indian economy is showing more resilience against the global ups and downs. So this is a good factor for the Indian economy and also for the markets. Dollar index has come down from 114 to 102.6. So this will help the rupees to be stable. Gold prices have, after touching 61,000, it is now at 59,670 for 10 grams. Next week, RBI Monetary Policy Committee meeting is there, and result will be out on 6th April. Street is expecting a rate hike of 25 basis points. If RBI raises interest rate more than 25 basis points, we will see a correction in the market. If it is by 25 basis points, there may not be big move in the market. If RBI changes the stance to accommodative, then we'll see a rally in the markets after the MPC meeting announcement. FIIs have bought 2,243 crores in this week, and DI also bought 4,953 crores in this week. So we can see at lower levels, both FIIs and DIIs are buying into the Indian markets. This shows the strength of our markets. So by following these smart money, the FIIs and DIIs are called the smart money people. So by following the smart money people, if you buy at lower levels and hold, you will make good returns from Indian markets. Government of India has announced new export policy. This new export policy is going to give a big push to the exports, and export oriented companies will do well because of this policy in the coming years. Government has announced about 30,000 crore orders on 31st March. So many defense companies have got these orders. So we can look at buying some of these good defense sector companies. FIIs are using dips to buy and continuously buying over the months. Market has shown sharp recovery from the lower level. Buy on dip strategy is a proven strategy for investors to make money from the markets. Mutual fund investors and those people who are investing in SIP should continue. We will definitely see good time coming into the markets in the current financial year. This is all for this week. If you like my video, please share with your friends, like the video, subscribe to my channel. We will meet again next week. Thank you.